This is going to destroy the middle class. Look, we've been talking a lot about the middle class lately. You've been hearing a lot about it. I'm sorry, but the middle class is nearly gone. Nearly half of employed middle class Americans plan to work beyond the age of 65, according to new data just out from Transamerica Center for Retirement Studies. The same study, by the way, that found that only 1 in 5 middle class Americans are very confident in their ability to maintain a financially comfortable retirement. Similarly, we just got Bankrate's new numbers, which just came out and highlighted that the majority of Americans who have a retirement goal in mind feel far behind. And nearly 1 in 4 don't even know how much it will take to live comfortably in their retirement years. So here's what this is telling us. The middle class is shrinking and falling more and more behind on their financial goals. That's what's happening. Bankrate's senior economist Mark Hamrick wrote, quote, "Given the sharp divide among those who express confidence or lack of it, that they'll be able to retire comfortably, we see a continuing pattern in our country of the haves and have-nots." So major factors here are at play, right? Including the 1-2 punch of high inflation and high interest rates, a weakening job market, a lack of financial intelligence, and frankly, a retirement system that is built to fail. It's on purpose. They want you to just invest in a 401k. That's it. Many Americans are just doing what they've been told to do for decades. It's not their fault. Set some money aside every month in a 401k and you'll be fine. But the reality is the 401k has devolved into a shell of a retirement plan. It's not operating as intended. In fact, it's hardly producing results at all. Recent data from Vanguard shows that the average 401k balance is just over $134,000. This is not adding up, folks. The drawbacks of the 401k is a topic I could discuss all day long, okay? But if you're unfamiliar, I want you to click on this video to learn why the 401k fails most people. Just click on this little card that's popped up here on the screen, okay? Watch that video. Meanwhile, Social Security is nearly on the brink of collapse.
Social Security is running through its trust fund, which you've probably heard about. A lot of our listeners have heard about. And that means that trust fund will be depleted in about 10 years. And at that point, Social Security benefits will be cut by about 20%. So if they don't fix it, there are ways to fix Social Security, but right now, the trajectory is Social Security spending more than it's taking in. The outcome could be cuts in retirement benefits, which of course means that more people might have to stay in the workforce for even longer. So that becomes, again, like a cyclical issue.
Millions of Americans are banking on Social Security as part of their retirement after decades of paying into the program. But the future is uncertain. Many people are calling on Congress to take action on Social Security. But of course, change is hard to come by when we're sending billions of dollars to Ukraine. It would, basically require both parties to come together and agree on this. But our Congress is filled with warmongers. So how are they going to care about your retirement when they want to send billions overseas? They're not. I don't know about you, but I'm not willing to wait around for systemic change, for harmony between Republicans and Democrats. Don't count on these entities to ensure your financial future. We'll get back to that video in a minute. We are in absolutely crazy times right now. There's everything going on with the election, of course, and then the BRICS meeting where they're trying to dump the US dollar. When everything's up in the air, it's easy to feel uncertain about a lot of things, including your money. The US dollar is in decline, and keeping up with inflation is a constant battle. But instead of worrying, you can actually do something a lot smarter. You can not only protect what you have, but grow it, even during times like these. By trading your fiat currency, your paper dollars, for tangible assets like real estate or precious metals, you're getting the best protection from inflation. And when you pick a performing asset that offers 18% internal rate of return, like the build-to-rent real estate that we offer here at Morris Invest, you're increasing that money. And at that point, you're not just outpacing inflation, you're leaving it in the dust. Now, if securing and growing your wealth aren't incentive enough, here are a few more advantages to investing in the next few weeks. First of all, even though mortgage rates are down, you might still be able to grab a bonus discount before the end of the year. For example, my company, Morris Invest, along with our team at Sedera Wealth, are still offering clients a rate buy-down credit. That's right, which significantly reduces your mortgage payment. And when your mortgage payment goes down, your cash flow on that rental property goes up. But bonus discounts are being phased out because of lower rates, so you need to act quickly. Now, on top of those discounts, if you invest in the next 2 to 3 weeks, you'll actually be able to claim the tax benefits on your 2024 tax bill. But wait, there's more. By investing right now, you'll capture equity as prices rise. We're already seeing an increase in appraisals, and prices are going to go up. And finally, the sooner you start the clock, the sooner you'll have tenants paying down your mortgage balance, and the sooner you'll start gaining appreciation and cash flow. Remember, real estate is the only asset class that allows you to use someone else's money, yes, the banks, to purchase an asset someone else pays for, your tenant, and delivers 4 streams of income. You get tax breaks, the appreciation, equity gains, and principal reduction, and cash flow. But don't wait. Take action right now to protect your money and grow it, especially during these uncertain times like these. Now, it's easy to get started. Just use the link below to schedule a free call with our team. There's zero pressure and no obligation. We'll simply hop on the phone, answer any questions you have, and we will create a plan to help you reach your financial goals faster and more easily. My team and I will be there to help you every step of the way. So book a call now, and we'll talk soon. If you're handing the potential of your retirement over to your employer, your custodian in Wall Street, you're not going to end up with a good outcome. In today's world of building out a comfortable retirement, it requires thinking outside of the box and being proactive. The issue is most people are totally busy, doing 2 jobs, 3 jobs. I know you're busy. You're probably busy right now. So thank you for even sitting down to watch this and learn about your retirement. We all have full lives with work, families, other responsibilities, but people don't have the time to seek out this information, and they certainly aren't going to learn it from a traditional financial advisor or anyone who has their hands in the pockets of Wall Street. So the combination of a 401k and a Social Security check for most Americans cannot provide a comfortable retirement. It's impossible. We've created this society where if you follow the system that's been laid out in front of you, it's going to collapse. You won't be able to retire comfortably, and you'll have no choice but to stay in the workforce or make other sacrifices in your older years. The retirement crisis is only escalating. And as you heard before, it's only going to continue to pulverize the middle class. I hate to break it to you, but now is not the time to wait on policy change. If you do, it might be too late. The study from Transamerica Institute for Retirement found that the middle class's top priority in retirement is just to enjoy a purposeful and meaningful life. That's it. But it's hard to have purpose and meaning when your headspace is consumed with making ends meet. And that's what matters most. It's not about money necessarily, but creating a secure financial future that you're able to enjoy and not have to worry and sweat about money when you're 72 years old, for crying out loud. If you're ready to take control of your retirement, this next video is going to blow your mind. Here's an interview I did with wealth lawyer Matt Sorensen and Sedera Wealth's Haley Neely. Now, we talk about alternative retirement accounts, buying performing assets that can fund your lifestyle and your retirement, and so much more. So click on that video right here, and we'll see you there.